Good morning to all our viewers of Business Today Television. I'm Sakshi Batra with me, Shel Bhatnagar, and this is Market Today. The video that you just saw at the opening of the show was tweeted by the Indian Army. And it signifies how India foiled a second round of Pakistan's airstrikes on military stations in several cities, including Jammu, Rajasthan, Gujarat and Punjab, that started off 8:30 p.m. at the night and lasted till over about 2 a.m. as well. Now, the military stations at Jammu, Pathankot, Udhampur were targeted by drones, missiles from Pakistan along the international border last night, but all threats were swiftly neutralized as per the Indian Armed Forces. There were about 50 drones that came our way, and all of our systems were successfully able to intercept all of them and destroy all of them. No casualties were reported even at Jammu, that was targeted late at night last night. As we move into another trading session today, of course, the markets will continue to react to all these geopolitical tensions. There has been a relative calm from what happened until 2 a.m. till now, about 8:30 a.m. in the morning. And we hope it sustains so, and the markets also find their feet as well. We will be helping you understand throughout the course of our discussion today, what should you keep in mind when you trade in the markets today? What are the trading strategies amid war that top market experts guide you? And we will also help you with all the updates from the geopolitical tensions that we are getting for you, and of course from the global cues for the markets as well. Good morning to all our viewers, and good morning, Shel.
Good morning, ladies and gentlemen. In exactly 1 hour and 30 minutes, there is most likely to be a briefing of the Ministry of External Affairs on the night that has gone by. Apart from the updates that Sakshi has given you, India went kinetic. Lahore was hit twice, along with Peshawar, and many other developments are in the pipeline as far as confirmations are concerned. It includes downing of Pakistani jets of their early warning systems, as also the overnight battle that continues on the LOC as far as artillery of both nations at war is concerned. Be that as it may, let's look at what are the cues that we are facing on the Lal Street today. End of the week, Friday, GIFT Nifty is pointing to a 1 percentage point downtick of about 213 points. This is what we have at the moment, but remember the good news, the GIFT Nifty was down to its lowest level intraday of 23,840. At the moment it is at 23,980. Therefore, it is a 140 point uptick from day's low. Whether it is patriotism or practicality, the downtick will be purchased. The kind of blows that India has afflicted on Pakistani military and other infrastructure has in no way impacted our economy. Sakshi, one thing that deserves mention, the Indian Army, the Defence Ministry press releases make it a point to say that there was no damage to Indian infrastructure, no material loss and no loss of men. No damage done, which essentially means that anything and everything that was aerial that came from Pakistan was taken out in air itself, and the retaliatory strikes were even worse as far as Indian armed forces are concerned. Sakshi.
Absolutely, and we will also be looking at how global voices came out afresh with statements on the geopolitical tensions. We did see US Vice President J.D. Vance now encouraging both India and Pakistan to de-escalate, but he maintained that the conflict is not their business. He said, and I quote, "We are not going to get involved in the middle of a war that's fundamentally none of our business and has nothing to do with America's ability to control it," unquote. That's the statement that came in from J.D. Vance. He also was speaking to Fox News in an interaction where he said that he hopes that the war does not reach to a point of any nuclear engagement at this point in time, is what his hope is. Remember, as a repercussion of what happened overnight, Michelle pointed out that in our retaliation, we managed to, destroy several of their infrastructure in Pakistan, including the Rawalpindi cricket stadium. And following that, we are hearing that even IPL matches between Punjab, Delhi Capitals at Dharamshala Stadium have also been called off as of yesterday as well. Most of the IPL matches have also been talked about being shifting now. So that's something that we will also keep an eye out on. All those updates will be importantly highlighted all through our conversation today. Now, let's look at how the global markets really panned out overnight and this morning to help you understand how the markets could be shaping up as we move along. Now, remember, it was a very big day for even the US markets. President Donald Trump on Thursday unveiled the broad outline of a trade agreement with the United Kingdom. Now, this is the first deal that's been signed by United States with a country whose imports were subject to new tariffs imposed in early April, but keep in place a 10% blanket post the trade deal has been done. That is significant for us to see because this could be just the beginning of trade deals that could pan out with other countries like India as well. So remains to be seen whether we can actually take this as a template, whether India could also be seeing like a 10% blanket tariff, or there could be some other updates as well. Remember, now, we do also know on the auto space, what the deal has specified is that on UK autos, the first 1 lakh vehicles imported from UK will be subject to a 10% rate, and additional vehicles will actually be subject to 25% rates. Those are some of the key findings from the trade deal that we have from the first one that US has marked out. Now, that reacting to that, we also saw the US markets ending higher in trade overnight, be it the Dow Jones, the S&P 500 or the Nasdaq. We did see an uptick across the board, Nasdaq leading the show 1% higher in trade. Now, apart from this, we will also look at how the Asian markets also panned out. Trading mixed this morning. Investors are awaiting China's April trade data. Uncertainty over the China trade deal still persists. We've seen Japan's Nikkei up by about 1%, Topics gaining 1%, Kospi rose by about 0.3% this early trade. Kosdaq also about, although Kosdaq did slip a tad bit, and Hong Kong's index also was up by about 0.2% as well. So it's a mixed trade. But remember, Bank of England has also cut interest rates by a surprise three-way split amidst the policymakers. So we will also look at how the European markets also react to all of that as well. Foreign investors, they've stayed net buyers of the Indian equities for 16th straight session, and they bought stocks worth about 2007 crores. Domestic institutional investors turned net sellers after buying for a day, and they sold off equities worth 596 crores. Sure.
Three other points that require mention, which might be an intraday negative for markets. Crude oil futures are above $60 a barrel. Remember, they're consolidating at 4-year lows. This is mainly because OPEC has decided to pump in more crude starting June onwards. So a bit of a bounce that has come in from lows of $56 a barrel, and this is something that we will need to look at. Apart from that, the dollar index is now above 100. It's risen for the third day in a row, and the US 10-year yield at a 3-week high 4.367. Apart from that, these three developments, we are going to look at a series of earnings that are going to impact the markets, in particular MCX, in particular Asian Paints, where there's a bit of a disappointment as far as Asian Paints is concerned, but MCX earnings have been phenomenal. Remember, at the end of the week, most participants would be skittish to carry long positions over the weekend, mainly on account of this geopolitical issue that we are facing with Pakistan. As Sakshi was pointing out, there are no signs of backing out by this country as far as the military escalation is concerned. One thing that many strategists have now started to say is that it's the backing that Pakistan receives from China, which is one of the main reasons why Pakistan continues this stubborn and stupid way forward. This is also a quasi battle between India and China for economic supremacy. As we all know, over the last 18 to 12 months, there has been a trend to diversify global supply chains and shift factories to India from China. Some things are best left unsaid, but one must look at the background of this struggle that's happening for supremacy within Asia and then decide the best way forward. But whether it's patriotism or practicality, one should look at focusing on buying the dip. Sakshi.
Absolutely. Let's look at a few stocks that we could be looking to react on the earnings. Titan will be reacting to the earnings. Q4 results did highlight that on a consolidated revenue basis, on a year-on-year basis, there was an uptick of 19.4% at 14,916 odd crores. We also did see that the EBITDA improved by 29% to 1537 crores. Margins also came in a tad higher, 10.3% higher versus 9.5%, and net profit was up by about 13% at 871 crores. We'll look at how this one pans out. L&T will be another one that we will be definitely looking at today. On a YOY basis, consolidated, we've seen revenue uptick of nearly 11% at 74,392 crores. What we've also seen is that the EBITDA improved by 13.5% to 8,202 crores. Even on the margins front, a tad improvement, 11% versus 10.8%. Net profit up 25% at 5,497 odd crores. So that will be also important to be seen. REC, that's another one that we are looking at today. Again, consolidated YOY basis show that the total income improved by about 21% odd at 15,348 crores. NII improved by 38%. What we've also seen is that both GNPA and net NPA have seen an improvement on a quarter-on-quarter basis, so that's another positive. Profitability improved by 5.7% at 4,310 crores. Even the NIMs improved slightly, so therefore there is a positive for this one as well. Apart from this, we'll be also looking at many other stocks like Pidilite as well. Highlights show that consolidated YOY numbers show a revenue uptick of 8% odd at 3,141 crores. EBITDA improvement of 9.5%. Margins improvement at 20.1% versus 19.8%. And what we've also seen is that the net profit has also seen an uptick of about 40.5%, and this time around it's come in at 422 odd crore rupees. So those are some of the numbers that we can be looking at, Shell.
8:42 a.m. ladies and gentlemen, we are about 18 minutes away as far as markets are concerned. Let's look at yesterday's action to get clues to what we would be looking forward to. Remember, yesterday was the weekly expiry of the Nifty, and therefore you had that last 10-minute sell-off, and that's primarily on account of the fact that a major support level was taken out, whether it was expiry led or whether it was because of escalations that started in this military conflict between India and Pakistan via in the afternoon as well. But one needs to see how the markets are going to react. I am very sure going to be a mature reaction. Nevertheless, let's look at a couple of stocks that outperformed dramatically despite yesterday's sell-off, and I am referring to the mid-cap IT space. We look at Coforge. It was the top gainer yesterday, up 2%. Remember, it was a reaction on earnings. The company is now 5.5% gaining as far as the last 5 sessions are concerned. Canara Bank, again, the dip was purchased, numbers were disappointing. The counter rose 1.9% in futures yesterday at 95.71. Open interest rose 2.8%. So these are build up of long positions. HCL Tech, one of the premier companies on the technology space, a part of the Nifty as well, was up 1.8%. This was also accompanied by a rise of open interest in futures to the extent of 2.3%. Focus on defensives. FMCG giant Britannia, the maker of Marie biscuits, 42 rupees higher as far as futures are concerned at 5409. And more importantly, one stock that should be on everybody's radar, that's Tata Motors. As I had mentioned yesterday, the traded volume of Tata Motors futures was more than Bank Nifty futures yesterday. That essentially says that a lot of interest is coming in at levels which are 3-4 year lows, and the fact that the stock has corrected about 40-45% from its all-time peak. The background is that the UK-India FTA will prompt Tata Motors to launch its top-end vehicles at far lower prices in India, because now duties will come down. So Sakshi, get ready to buy a Defender if you haven't bought it already.
Absolutely, we'll definitely keep an eye out on all of those, updates as well. And remember, as we speak, we are expected to see Raksha Mantri meet, the heads of tri-services and take an update on the border situations. And all of those will be very important to track as of today as well. And apart from that, we will be getting you voices not just from the markets, but also from those who've been watching war situations very, very closely in India for many decades throughout the course of the days to help you understand what the current situation and the evolving situation should be at this point in time. We are also looking at how remember, what's very important for our viewers to understand is that amidst all this war, what we are seeing is heightened amount of fake news that spread across social media. So please do not trust each and everything that you see. There are videos that are unconfirmed from any part of the world that are being tweeted, sent across WhatsApp, on social media. So be very, very aware that everything that you see on your WhatsApp groups or on Twitter is not really true at this point in time. Please adhere to only the government channels to see what the updates are, and do not trust on any news updates that are coming in. Say for instance, there are already PIB fact check that's happening, so you can go on PIB website and look at those fact checks as well, as they are consistently making people aware of the false claims being done by Pakistan at this point in time as well. At this point in time, what we know the situation is that India has been successfully able to intercept all those 8 missiles that were fired towards us last night, all the 50 drones that were fired across various regions overnight. There was no loss of casualty or a harm to either a military base or any kind of civilian infrastructure in any of the attacks that have been made so far. So that's the update that we have, and more updates will follow at 10 a.m. when the briefing of the MEA will be done.
Okay. Within the mid-cap space, ladies and gentlemen, we'll keeping an eye out on Union Bank post its fantastic fourth quarter performance, in which net profit was at 4,985 crores versus 3,310 crores. As also Jindal Stainless net profit surged to 590 crores versus 500 crores in the year ago period, and the revenue at the same time was at 10,200 crores versus 9,454 crores. Keep these two very high beta counters in front of your radar when it comes to these companies. Stocks at new highs. Chambal Fertilizers earnings have been phenomenal. Net profit for the fourth quarter rose about 34% to 130 crores, and the revenue was marginally lower at 2,450 crore rupees versus 2,643 crore rupees. So, three stocks: Union Bank, Jindal Stainless and Chambal Fertilizers. All three of them are a part of the F&O, as also the cash market. Sakshi.
There are some fund houses recommendations that have come in that you could definitely keep on your radar post the earnings. On L&T, there is Axis, Investec, Jefferies, Bernstein report. All of them have maintained a buy on the company post the earnings. Many have raised the target price as well, including Axis, Investec and Jefferies have all increased their target prices, ranging anywhere between 3,922 to all the way up to 4,150. The highest target price that is being given on L&T is by Investec at 4,115 on L&T post the earnings. On Titan again, there is Axis, there's Morgan Stanley, Macquarie report, and also a Jefferies report as well that we are seeing. And on Titan, what we see is that the highest target is being given by Morgan Stanley, Macquarie, which has a target price of 4,000 rupees per share on Titan, with an outperform on the company. Even Morgan Stanley has an overweight rating. We also have a rating from Axis, which has maintained a hold on this one at this point in time, and Jefferies also has a hold on this as well at this point. On Pidilite, we have a Macquarie rating which has an underperform the company. It has cut the target price to 2600 post the earnings. So there is something that is negative on the earnings that they have highlighted, and there could be a stock reaction on that front. On Britannia also, Macquarie has maintained an outperform, cut the target price to 4600. For both Pidilite and Britannia is something that we will need to watch out for.
One interesting thing, Sakshi, is the fact that one will need to see what Pakistan does during the daytime.
Yeah.
Because, well, under night you have the cover of darkness, therefore much is not visible. However, given the fact that the regime which now is controlling Pakistan is, how should I say, unbalanced, to use the politest word that I have in my quiver, that it will be interesting to see their daytime reaction, because yesterday they targeted the entire swath of North India and Western India, all the way from the top of Kashmir down to Gujarat. And at all situations, Sakshi, you've seen their drones being shot down, you've seen their aircrafts being taken out of the sky, their early warning system was destroyed, and more importantly, as Sakshi has been pointing out, the Indian Army's Defence Ministry statement that none of Indian military assets, none of men and material were impacted. In fact, nothing that Pakistan sent up in air landed in the Indian side except for 3 of their jets, 1 of their early warning systems, more drones than Sakshi and I can count together, and of course 8 Pakistani missiles. All this will be known once the MEA briefing starts at 9:30 a.m. and more importantly, the way forward. I can assure you the last statement would be India has taken a measured, non-escalatory and a retaliatory response. It is up to Pakistan to de-escalate.
Absolutely, and which they have not done.
Yes.
Despite repeated warnings that have come in from India, and they are facing the repercussions of not adhering to that. There was significant and very unfortunate for Pakistan to have taken this irresponsible step of continuing to send out drones and missiles towards India, not knowing that none of those will be successful, looking at the supremacy that we have of the Indian Armed Forces and our aviation systems. Let's welcome our guest on board, Mayuresh Joshi, Head of Equity Research, William O'Neill India, is now joining in on the program with us. Warm welcome. Good morning to you, Mayuresh. Good to have you with us. A lot has happened over the last 48 hours for us to really fathom. But do tell us, we were talking about that, Pakistan should not retaliate, it should de-escalate, but there was significant escalation overnight, almost indicating that we are at now war, a complete war with Pakistan. Some sense prevailed this morning, I would say after 3 a.m. onwards, when things tried to settle down a bit, and we do hope that it remains so, because we are looking at the 10 a.m. meeting that will further highlight what happened overnight. But how are you looking at this developing situation by way of markets and investments?
Morning, Sakshi. Morning, Shelter. I think the first thing is kudos to our Indian Army. They are the ones who are protecting us when we are sleeping peacefully at night at the borders, and therefore may God give them all the strength to probably do what the Pakistanis are doing at this juncture, and we are giving them a befitting reply. So Jai Hind, very, very proud of our army and our soldiers. Having said that, Sakshi, I think Pakistan wants to escalate. You understand from an economic and a political standpoint, Pakistan's standing, both in terms of how they're positioned from a global economic perspective. They're taking loans from the IMF. They've got issues in terms of all aspects of their GDP. And therefore, I think this was a measure that was planned out in the most barbaric fashion, starting with the Pahalgam attacks. And now they're probably doing the same in terms of the civilian attacks of what we are hearing from the Defense Ministry statements. which is absolutely barbaric, and the Indian Army is responding correspondingly. So, in my opinion, again, I think the Indian markets have taken it very, very maturely. Obviously, I think if there is heightened escalation, which I don't personally believe, because I was following Shelser's tweets yesterday very, very intently. Where he was very, very proactive in terms of putting out of what is happening. Their defense system is down. You're probably seeing one of their AVACs probably go down, which was the only AVAC that they probably have in their arsenal. And therefore, I think if you're trying to say that you're trying to prove a point, it's useless unless you probably have some theoretical reasoning behind it. And therefore, I think the markets should take it very, very logically. They have so far. I don't see any structural decline for the markets. In fact, I think once this is all over in the next few days, I think the markets will recoup back. And markets is just a part and parcel in terms of reacting to all these elements taking place. So unless there is huge escalation, which I personally don't think so, I think there is every hope that the Saudi minister is now expected to visit Pakistan as we speak. So I think if sanity prevails, I think the markets will come back. And anyway, we will not correct it. The maturity that Indian markets have shown might just sustain.
Absolutely, and a very good morning to you, Mayuresh. Yes, Sakshi and I were awake all through the night. The last tweet I think that Sakshi sent was at 3:40 a.m. In our local group. I was awake too, trying to gauge the intensity of the gap down, and the intensity is decreasing by every passing minute. We were down about 230 to 80 points in the morning, now down just about 110, and my gut feel is that we'll open 70-80 points lower, and this will be recouped as the day passes. Whether it's patriotism or practicality, the buy the dip strategy is working very well. Now tell me what is on your buy list.
So, I think a couple of stocks, I think, which have given decent numbers.
Yes.
One, obviously, from the alcohol beverages space, Radico Khaitan is something that we continue liking. Obviously, there has been a lot of news with the UK FTA agreement expected to come through that a lot of scotch and whiskies probably might become cheaper to import. But let's understand the kind of portfolio that Radico has built. Rampur single malt, one of the best whiskies, single malts in the world as we speak. Sangam malt whiskey, I think, is one of the best in terms of not just quality, taste, but the awards and recognition that they're probably getting. Magic Moments vodka that they're probably having. So I think the portfolio that they probably carry, the premiumization on their balance sheet is going to work in their favor. And therefore, from a volume perspective, my own sense is that what the management has put forth, even within the premium category, the super premium category should exceed 500 or 600 crores in terms of top line, which was just 300 or 350 for the year back. In terms of contribution to the overall top line, it's already at 69% expected to inch higher. Input costs, specifically ENA, molasses, glass prices, are on the lower side, and therefore I think the margins at 13.5%, 13.8% should sustain and improve as operating leverage and premiumization take further strides in terms of their overall portfolio. From a balance sheet perspective, the net debt has come down, and therefore I think the rating rankings that we probably see, the expectations in terms of the market that they're operating out of, exports that they're expected to do, holds good in terms of earnings pedigree. So I think this is one stock that we're keeping on our radar. The other stock is Bharti Hexacom. Our own sense is that earnings should start recovering as we head into the second half. But for the telecom sector in particular, our own sense in terms of ARPU increases should happen in a calibrated manner over the next few quarters. Once that starts happening, I think the kind of implied effect that happens onto the balance sheet for the parent Bharti Airtel or for a company like Bharti Hexacom should be substantial. ARPU increases give you that flexibility in terms of margin expansion. It gives you that flexibility in terms of free cash flows. And therefore, I think the home and office business, where the subscription addition has been quite decent in the last few quarters, last quarter was one of the best. That should show an increasing trend going forward as well. And from a balance sheet construct as well, very well placed in terms of all the core numbers that we are probably looking, and specifically ROEs, where our own sense is that the benchmark that we've kept at 17.5% should get satisfied along with the earnings trajectory that should continue. So in our opinion, I think Bharti Hexacom should also.
We'll keep Sakshi out of the discussion as far as Radico Khaitan is concerned because she does not consume the products that are made by that. But Mayuresh, the two brands that you mentioned, Rampur and Sangam, They are doing extremely well. And
Yeah.
Sakshi, what's really interesting is that these premiumizations that Mayuresh is talking about, these whiskies are priced higher than
Yes.
imported scotch. So you can well imagine the premium that it enjoys, and the fact that in some products, Mayuresh, because Radico is based out of New Delhi, I can
Yeah.
assure you there is a waiting list.
Yes.
And look at how margins have improved for Radico Sakshi in terms of the year on year improvement in gross margin. It is
Yes.
up by 250 basis points, 43.5. Net profit margin is up 169 basis points at 7%. And of course, this is a dramatic rise in top line, 21% higher year on year. It's appreciated Q and Q as well. And of course, when you look at the net profit, that is also up about 60%. So, and the added, how should I say, blending of the India UK FTA. Sakshi was mentioning yesterday that Radico is the largest importer of scotch as well. Mayuresh, this discussion is going towards Friday evening.
Yes.
And I think it should also coincide by raising a toast to what our
Yes.
armed forces will do over the next 2 days.
Absolutely,
Yes.
I agree. I must, because you bring up this point, last year was the anniversary of the Kargil War, the
Yes.
25th anniversary of Kargil War, and Radico launched a product which was called Class of 1999 as a salute to the Indian Armed Forces for winning that uphill battle
Yes.
with a lot of class and a lot of grit and valor.
Yes.
Even that product was priced expensively. But I think Sakshi is getting bored of this discussion, and she might want to ask you about Tata Motors, your view, Sakshi.
Please.
I do want to definitely ask him about Tata Motors. It's been the stock that we've been focusing on
Yes.
over the last 3 days, and there are so many triggers to talk about. Just for marking out for our viewers, 23,760, about 480 points lower, 1.9% lower in the first tick of the pre-open trade as of now. But this should improve. We don't need to panic at all at this point in time. This is as a knee jerk to what has happened overnight at the cross borders. So one has to definitely keep an eye out on that. Tata Motors, there is kind of a downtake, 3.5% odd, as a reflection of what's happening on the overall markets in the pre-open space. So we'll see how that one also pans out. But three triggers to be precise, Mayuresh. One is the US UK trade deal, the first of many that will be following. What will be the impact of that? We also signed a deal with the UK in our FTA. What will be the impact of that? Demerger of the CV business, that's another one. So all eyes are on Tata Motors and whether it will now begin another set of a rally towards its erstwhile highs.
So, Sakshi, morning to you as well. Sorry for boring you with our initial. But what really transpires is that all these aspects have been taken into stride as far as the price action or the sentiment that has played out on the stock. Now, two things to probably work out or watch out for. From Tata Motors, JLR still becomes the largest portfolio. 80% is still contributed by JLR, both in terms of top line as well as the EBIT contribution. Now, the key markets are North America and China. Now, what you're probably seeing in terms of tariff impositions, clawback, what probably happens over the next 90 days, rather than 60, 65 days now, is going to be extremely critical, both for Tata Motors and all its competitors based out of Europe or probably exporting to North America. If there is a marginal impact in terms of tariff impositions or an impact which can be gestated or digested onto the balance sheet, I think the stock will take that very, very positively in its stride. But that's a large unknown, at least at this juncture. The second biggest market, which is China, and the strides that BYD is probably doing, both in terms of the models that we have probably seen on social media, in terms of the designing, in terms of their efficiency, in terms of the content per car internally as well. I think all these aspects make us believe that if they continue making strides, China, which is the second largest market for JLR, how do sales play out there is going to be extremely critical. The third aspect obviously becomes core earnings itself, and therefore I think the kind of expenditure that has been done on the balance sheet in terms of R&D, in terms of development of new electrical platforms, in terms of the new EV variants for the existing JLR models as well. I think a large part of that has been spent, and some impediment is going to happen with the expectations of global reports that I was reading through. That might show tepid growth in auto sales, at least as this year is concerned. So I think most positives priced in. There are some headwinds for Tata Motors as these factors play out over the next few months. And therefore, my own sense is that from a price damage perspective, a large part of the price damage is done. Whether there is re-rating around the corner immediately, I probably don't think so. And therefore, the stock just might go into a time consolidation over the next few months.
Okay, let's put the market in perspective. Down 1.5% as far as Nifty is concerned. Sakshi, the earlier support level of 23,800 came in very, very handy. It's been tested right at the start of pre-open. Now we are back above 23,900. My estimate is that in the next couple of minutes you will see the index climb above 24,000, and again that dip will be purchased into. I'll request the PCR to kindly, if possible, show the long-term chart of the Nifty over the last 1 month or so, from the low of April 7th to about 24,700. The Nifty has appreciated 7%. It's just giving back some of those gains because of this how should I say, issue that we are grappling with Pakistan. But this dip is something that needs to be sensibly purchased. See, it's almost now inching way up from the 400 points, 430 points that it had opened lower. Now just 350, and we still have about 2 or 3 minutes left. In the large cap space, Mayuresh, where is your lens as far as quality valuations are concerned, and where are you buying? You've mentioned Radico and Bharti Hexa from the mid cap space.
Right. So I think from the large caps, L&T still remains to be a preferred choice of safety, Shelter. I think what has really happened over the last few quarters, where government capex had gone down because of state elections, etc. I think that is largely behind us now. And in all aspects in terms of infrastructure growth, whether it's roads, railways, highways, defense, I think L&T's order book is well stacked up. Outside that, I think they're executing well across these projects as well, including hydrocarbons in its overseas business segments. And therefore, I think the expectations in terms of steady growth expected to come through working capital requirement in check and bounds. And therefore, ROE improvement as we see it is something that L&T can probably deliver. Again, I think the capex that is happening from the government side is now expected to continue for the next few quarters. And therefore, my own sense is that the numbers delivery should keep on coming through on the balance sheet. So I think L&T, which is a proxy, a barometer to the Indian economy, I think should continue to.
And actually, one more point I'd like to raise about L&T. It is the quietest defense supplier to the government of India. Be it nuclear submarines, be it ATAGS, which is the advanced artillery above 155 mm designation, and of course building the right infrastructure, border infrastructure, if I may say so, for roads, for hardened military installations. L&T is the point of contact that the government of India has. At the moment, L&T, I'll request the PCR to please fire the longer term chart, is off anywhere between 22 to 20% from its all-time high. So this again is a margin of safety. Mayuresh will tell you that over the last 30 years, there has never been an instance where a dip on L&T has never been taken out from the all-time high. So this is available. And if I was Sakshi, I'm not sure whether this is confirmatory or not, but the government of India has asked all defense contractors to come down to Delhi. So let's see what happens.
Mayuresh, stay with us. We also have a foreign expert now joining in, Mr. Robinder Sachdev, who's been closely tracking all the world developments, and he's going to be sharing some updates and insights with us, sir. Warm welcome. Good morning to you yet again. We were talking about, the possibilities of escalation and retaliation from Pakistan's side last time when we spoke to you, sir. What would you term as what has transpired over the last 24 hours from Pakistan side? Of course, we have been celebrating Indian Armed Forces befitting reply to Pakistan for all the misadventures that have taken it. How would you describe it? Is it escalation? Is it a call to war?
Thank you. Pleasure to you. It is a call to war. Not only a call to war, it is war right now. Okay, whatever be the intensity and geographic context, it is war. Quickly, before moving on, L&T and international, L&T, by the way, will hugely benefit from the India, Middle East, Europe corridor, which is in the pipeline and hopefully would come up. And when that comes up, India's component would be engineering, rail lines, pipelines, etc. Americans would supply the GE and whatever locomotives and technology and electronic systems, and the Arabs would bring in the money. So that's the big picture of the corridor. And from India, there's some such heavy-duty firms will definitely, stand to gain. Now back to Pakistan and India. It certainly is a war. It's an escalation, but still not maybe. I mean, it is an escalation, and this escalation could go higher. Okay, it could go higher, and that is if not the worry, that is the situation out there. Pakistan had a choice. When we delivered the attack on the night of the day before, we positioned it as a tit for tat. Okay, now it was Pakistan's choice how to respond. It could have down spiraled, yes, done something like LOC firing artillery, etc. Or it could have spiraled up. It seems that Pakistan has made the choice to spiral up. Okay, so whichever be it, the Pakistan Army, intelligence, whichever sections who were dominant in this decision are leading Pakistan to this, that they've started responding with drones and targeting our military locations. See, I mean, narratives and positioning is there. We are targeting the terror infrastructure of first strikes, right? But then Pakistan got back to us because there is no such terror infrastructure in India which Pakistan can target. So Pakistan can only target if it wants military or maybe civilian. So Pakistan started responding by attacking our military installations. Okay, to which we then next morning, in waves, it goes on from what we know. Then we also hit out at Pakistan, military installations. And that's what seems to be going in this one, the aerial combat, right? Drones and missiles being shot, and there is a fog of war. We really do not know fully, but generally speaking, all the missiles, drones that Pakistan has, launched at India more or less have been, intercepted. And ours have also been intercepted, some in Pakistan, but ours have delivered some hits, including the air defense radar system at Lahore. So that's what's going on in the aerial, apparently. And along with it, there is on the ground, on the LOC, heavy artillery fire from across Pakistan into India and from us into them, artillery as of now. We are trying to, counter. We've taken out some Pakistan command post, I think, there. But as of last count, if I heard, the number was around 16 or 25 Indian civilians killed. So that is the ground war which is happening right now on the terrain. And lastly, apparently, there was some, attempt at infiltration or attempt at coming into India from the Pakistani, whatever army or whichever wings, which our BSF countered. So there has been no entry, quote unquote, of any Pakistani, sorry, just a moment.
A very good morning to you, Mr. Sachdev. Shell this side. I'm curious to know if you are talking to some of your peers from across the border. What are they telling you, if at all? The logic of Pakistan's stubbornness against the backdrop of a complete economic meltdown. Yesterday's escalation happened at a time when Pakistan is to approach IMF today for its loan tranche?
No, absolutely. You know, that would be one important development to track and look into today. The IMF meeting out there, India is going to bring up this. The details, the information, or the position that the money which IMF is giving will be now giving to Pakistan. Now, especially, Pakistan will very well, divert it to some other uses and, do some creative bookkeeping, so to say. That and also the past IMF loans, and also India will be pressing IMF that if Pakistan
Okay.
should be, I think, that if Pakistan escalates more, then all of its economic redevelopment plans for Pakistan and the monies which have been put in will go down the drain. So if IMF wants to, and that is the same message I think we are conveying to the Asian Development Bank, right? That the monies that you spend trying to build up Pakistan, bail it out, etc., would are all going to go down the drain the more this situation escalates. But the issue we are facing in both these institutions is that the ultimately the board of governors, so to say, are the finance ministers of all countries, and in IMF, the Chinese are the number three voting percentage, and in ADB, they're the number two. So whatever positions we put forth will carry logic, perhaps with the executive board. But if it comes to an important decision like this, the matter would pop up to the board of governors, and therein China would do what it does at the UN Security Council, that is, block India's path.
Ladies and gentlemen, we have the market right there in front of us, and as I have been telling you, the dip is getting purchased, now down just 162, 24,111, and very, very quickly I'll tell you what is clicking and what is clicking in the green. L&T 2.3% higher. We'll focus on defense to begin with. BEL 1.1% higher. Remember, the entire Akash series of missiles is made by BEL. BDL, the maker of all artillery shells, 0.5% higher. HAL, the entire IAF aircraft fleet depends on the very strong shoulders of this company, 1% higher, 44.64. Very quickly, we'll get back to the markets. You have Asian Paints, the top loser as far as markets are concerned on the Nifty, 1.5% lower, 22.72. Amongst the index heavyweights, you have Tata Motors in the green, 684.50. Let's look at the three banks. ICICI Bank is down 1.2%. HDFC Bank is down 0.8%. SBI is down 0.9%. And of course, you have Axis Bank down 0.5%. So at the moment, in the top 10 super index heavyweight stocks, it's only L&T and Tata Motors that is in the green. Let's look at the broader markets that are there in front of us. Only 186 stocks are in the green, Sakshi. This number I'm noting down because this will improve dramatically versus 2002, which are in the red. So the advanced decline is 1:10 to begin with. Now all 19 stocks index are in the red. The losses are being led by the realty index 1.3% lower, energy index 1.3% lower, small cap 1.2% lower, and the least losses are in the Nifty PSU Bank. Sakshi, what are you watching?
Consumer durables. Titan is up by 3.8%. Smart moves after the earnings that can be seen. Kalyan Jewellers also after improvement in earnings is also in the green. Although rest of the sectors are actually under pressure. Even the broader markets, mid and small caps, they are opening with slight losses of about 0.5% in trade. What we look at is in F&O space. Titan, L&T continue to gain. Union Bank of India, another top mover in the space right now. On the downside, you have MCX 3% lower on F&O, Titagarh Rail, Irida, Indigo also, GAIL. These are the stocks that are facing some pressures at this point in time. Let's look at the top 500 names and to see any kind of top movers that we can see. Idea Forge, drone maker, 8.6% higher in trade. Zen Technologies, 5% higher. Swan Defense, 5% higher. So the mid caps, the smaller companies within the defense are showing sharp moves. KPR Mill with the textile move continuing. Third day of a rally that continues on this stock. 5% higher for this one in trade today again. Dilip Biltcon 3.5% up. And you also have some of the other lesser known stock. Paras Defense is another one, 3% higher in trade from the defense space. So it's largely all the defense stocks that will continue to be in focus. Let's in fact go back to Mayuresh to find out what exactly does he really look at in this market. What is the ideal way to look at this market, Mayuresh, and what would you advise retail investors? Should one buy aggressively? Should one just stagger their purchase, take benefit of all the dips? What to buy at this point?
No, so I think you need to be selective, Sakshi. I think there's no two ways about it. I think the initial phase, what we were speaking 6 months back, was more domestic focused. We still believe that domestic focus and the themes that are now evolving, consumption should be a big theme that should come through, both discretionary selectively and consumer durables, both in terms of the tax cut benefits that will start seeping through from this quarter itself. But our own sense is that the exponential growth should start coming back in the second half in view with the festive season. And therefore, I think footwear makers, apparel makers, which are below 1,000 odd rupees in terms of pricing, we've already discussed a few of the other stories in the morning comments. And therefore, I think these two segments of the market, as far as consumption is concerned, will probably start moving up the value chain. I think a few stocks that we're probably keeping on our radar within both these spaces. I think have a look out for a stock like a Bata or a Campus active there. Campus more so because I think they've got a large part of their internal operations completely integrated, and therefore the working capital cycle remains in their control. Balance sheet is very, very strong, and expectations of the sports and athleisure market expected to grow quite exponentially over the next few years. Similarly, I think I'll watch out for apparel makers. You've seen good numbers come through from the lower run players, except Trent, X-Trent, and therefore I think players like a V-Mart retail, which probably have a larger share of apparel compared to FMCG and the other products, might actually start benefiting on two counts. One, I think tier 2, tier 3 cities where urban, semi-urban consumption probably happens with the tax cuts should start benefiting. And the second element in terms of their exposure as far as rural markets are concerned and where the placement of their stores are, I think they should start picking up quite significantly as consumption picks up significantly. So I think consumption becomes one subpar theme one theme that can probably do well, which has been subpar so.
Okay, ladies and gentlemen, let's look at what the markets are telling us at this point of time. It's only and only defense which is on a tier. In fact, it's on an offense. So as Sakshi's marked out two defense drone makers, let me just put it on the PSU space. BDL 2.5% higher, BEL 2% higher, HAL 1.3% higher. Masgaon Dock has slipped a bit, but it's dramatically off its intraday low. Let me just give you that data as well, so that you can imagine that the dip has been purchased. The low on Masgaon Dock was 2787. It is now at 2805. So 18 points add on this. So Cochin Shipyard, the low was 1418. It is now at 1429. Garden Reach, the low was 1741. It's now at 1757. So these dips are getting purchased into. The Nifty down 160 points. Nifty Bank down 500 points. The Nifty IT index down 256 points. But all of them are bouncing from their intraday lows. Sakshi.
Absolutely. Let's in fact welcome our colleague Karishma Sudani, who's been tracking the big picture at the aviation space over the last 36 hours to 48 hours amidst all the developments on the geopolitical world. Good morning to you, Karishma. What's the latest update that you have? How many more cancellations happened till last night, and what is expected across India today?
Good morning, Sakshi. Thank you for your question. This morning, we have learned that the Delhi airport, let alone at the Delhi, there have been more than 90 cancellations that we have seen, a total of close to 900 cancellations in the past 4 days, owing to the growing tensions between India and Pakistan and the impact that it has had on the airspace. Yesterday, Sakshi, we were discussing about the kind of revenue loss that airlines have to go through this. just a minor delay or few cancellations or changing the airspace to them, let alone causes close to about 350 crore of additional loss that they have to take for a week, and cancellations will definitely owe to much more. As you know, security across airports have been increased. The DCAS yesterday also released a statement saying that there will be security ramped up across all the remaining airports in Delhi. Now we have close to about 28 airports which have been issued as no under the no travel mode, owing to the safety of the passengers, and all visitors are restricted from entering the terminal buildings across India.
Okay, let's look at Sakshi. What are the other things that are coming in as far as Indigo is concerned? Remember, this is a company that controls 66% of India's aviation sector. I'm sure, yes, 5026. This is down 2% in trade today. What else are you hearing in terms of any help, monetary help, Karishma, that the government of India may want to extend to airlines, or may want to tweak the ATF prices to provide some relief? Any thoughts or any clues coming from the Ministry of Finance on this one?
Aviation is a deregulated sector in the country, and while there is a hope for a stimulus or some kind of additional fiscal support coming in from Ministry of Civil Aviation or Finance, it's very unlikely because of the way the sector works. In fact, last week Air India had written a letter to Ministry of Civil Aviation asking the minister if there could be some kind of subsidy package that could be given to them.
Yeah.
There's been no response on that. A further reduction in ATF is completely in the hands of Ministry of Finance, which will be something to watch out of. But owing to the fact that the losses are so big, a mere reduction in ATF may not also actually help them operationally to balance things. So it's a wait and
But Karishma, I also want to know on the update. See, since we had the earlier update that till 5:30 tomorrow, that's May 10, all the cancellations and the airports shut was informed. What is the likelihood that this timeline will be extended? What are you hearing from your sources at this point?
Yes, actually, it's very likely that there could be an extension on this. As of now, officially, there has been no update that there is an extension beyond May 10th, 5:30 a.m. But owing to the fact that yesterday BCAS and DGCA decided to add another four airports to the suspension list, gives us a clear idea that a very close watch, and it's likely that they could increase this. We'll keep a close watch on this, and as and when official word comes out, we'll share it with you.
Okay. Thank you so much, Karishma, for all that update. Keep an eye out on this space, and we'll keep coming back to you for all the updates on that front. Coming back to Mayuresh then. Mayuresh, how are you looking at the aviation space, tourism, hospitality? Do you think there could be some knee jerks, and, how should one really look at this space?
Because I think this is the best season that probably happens. I think since a large part of North India, West India has got blocked, there are cancellations coming through. So it will get impacted. There is no two ways about it. Both the travel, tourism, hospitality, aviation sectors are going to take a hit. But I think let's see how this evolves. But yes, I think the hit will be there because I think this is supposed to be one of the best quarters that these companies report.
Okay, got that. Well, Mayuresh, apart from this, could you also help us really understand, based on the earnings that have come in so far, have you already started to identify some more stocks that you would probably be adding to your improvement list at this point in time? How would you look at that?
So that's what I just mentioned, Sakshi. I think consumption as a basket is something that is coming on to our Panray software, which probably detects a lot of parameters, including earnings, quality of earnings, top line growth, margins, institution holding, return ratios, leverage positions, etc. And therefore, I think within this pocket, as I said, footwear makers, apparel makers, anything that's on the lower end of the consumption basket should show significant amount of trends and growth trends. That is. As we head into the second half. And therefore, I think certain pockets, certain stocks, as I just mentioned, whether it's Bata, whether it's Campus Activewear from the footwear space, whether you're talking about a V-Mart retail within the apparel makers, I think they're probably coming on our radar as we speak, and we'll keep them on our watch list on how do they come into our portfolios over the next few weeks as things happen.
Okay, that's going to be an interesting space to watch out for. I also wanted to take an update on IT. What's your fresh view there? We've seen large part of the earnings are already out. Things improving on the tariff front in the US. Is the approach changing a tad bit?
नहीं बिल्कुल नहीं मुझे लगता है कि हम अभी भी वेट एंड वॉच कर रहे हैं let's see how this whole thing evolves because it's too premature to take a call in terms of
Okay.
the evolving situation there and we don't want to take punts in terms of expectations I think let things come as they may and then we'll probably take calls.
Okay, got that. Well, thank you then on that note, Mayuresh, for being with us on the show. Well, as you said, that we are very, very proud of our Indian Armed Forces. We continue to stand by them in this hour, and we hope sense prevails on our neighbor at this point in time to now quieten down from their earlier expeditions because it is them who they will hurt the most in any kind of misadventures that they do. And we continue to pray for the families and for our armed forces and Godspeed to them. Thank you so much for being with us, Mailesh.
Absolutely, Sakshi. Pleasure always. As you said rightly. Jai Hind.
Thank you. All right, viewers, we have half an hour more in the morning edition of Market Today. We will be tracking the markets for you. And now we are also joined by another guest who's with us. We have Kunal V. Parar, Vice President Technical Research at Choice Equity, now joining in. Kunal, welcome. Good morning to you. Tell us, how are you really looking at the current evolving situation geopolitically? I'm sure all your clients must be calling you, sir, बहुत ज़्यादा गिरेगा क्या market, क्या करना चाहिए? अभी देखें तो 200 points down है, 24,000 के levels आ चुके हैं. तो आप क्या अग्रेसिवली बाय करने की सलाह दे रहे हैं समय पर या फिर आप कह रहे हैं अभी वेट एंड वॉच सिचुएशन को देखें क्या सलाह दे रहे हैं अभी आप
Well, good morning. Right now, we are giving only one suggestion: wait and watch. No doubt, we have been witnessing some 200 points of correction in the market, but nothing to worry about this market. Downside, Nifty has strong support at 23,800, and before Nifty faced the same, and right now it has become a good support for the Nifty. So yes, if Nifty breaks this support, then further downside would be there. But yes, side by side, we are also suggesting to our client to wait for the timing, not to go for any fresh accumulation or averaging. So the way escalation has been going on between Pakistan and India, I think further correction would be there. If this goes to step 5, right now we are on step 4 in this war. And it goes to step 5, then further correction that we might expect somewhere around 23,200 to 23,000. So as of now, we are suggesting to hold and wait and watch.
okay and I can see that symbolic operation Sindoor symbol that you have on your tie and you have probably been indicating solidarity with the Indian Armed Forces there. So we'll definitely be standing by with all our forces at this point in time and continue to hope Operation Sindoor, which has been absolute success, so far. It continues to thwart any kind of misadventures across the borders. 24,077. Let's go on to understanding about some of the stocks and key sectors that are in focus. I want to first begin with the defense names. Of course, all the air combat, ammunition being used largely prepared by HAL, by BEL. Then we also have, probably all the missiles, rockets that are being fired at this point in time have a lot of, L&T infrastructure being used at this point in time as well. We have BDL that also has been, providing to a lot of all those orders to the Indian Armed Forces amidst this fight. And the eyes are coming back on this entire space. How are you looking at the defense stocks at this point in time?
Right now, 2 to 3 stocks are there, which looks very attractive. Nifty India Defense up by 1.36%, but 2 to 3 stocks are there, and amongst this, I think BDL looks very attractive. Right now, BDL is trading at 1503 level. If we pull out its chart, right now BDL has been trading very strong support of 20 days moving average. Not only this, it has a strong support of 1430 as well. So one can get into the stock at present level because on a smaller time frame, this stock has been trading in a higher top higher bottom formation. So further upside momentum would be there. So right now stock is trading at 1506. One can get into the stock with strict stop loss of 1430. If we talk about target size, the way stock has been trading, I think first target we may see at 1565, and if stock breaks this level, then further upside would be there up to the level of 1660. Another stock is HM, same formation. Stock has been trading with its strong support of 20 DMA. Not only this, before stock faced 4340 as a strong resistance, now it has become a good support for the counters. So multiple support are there for this counter. One can get into the stock. We may see good spark in the counter during upcoming trading session. One can keep 4330 as strict as well. Right now stock is trading at 4500. If we talk about target size, then the first target would be at 4630, and afterwards even we may somewhere around 4840 as our final target. So HL, BDL, and even BEML looks very good, considering daily time frame and weekly time frame.
Got that. So that's the defense space and how we will continue to look at it. 15-14 for BDL, 4% higher. It's the one which is the top mover at this point in time, along with BL, HAL, and we are seeing a lot of them even in the broader markets. Idea Forge, we are looking at Premier Explosives, your Paras Defense, a lot of these stocks that are buzzing from the defense space today. So we'll continue to keep an eye out on the defense pack. Let's look at some of the earnings that are coming in now, Kunal. How would you look at Asian Paints? It's dropped after the earnings. Revenue was down 4%. Net profit was down 45% to 692 crores. EBITDA down 15% to 1436 crores, and the margins have now come down to 17.2% as well. So that's the kind of weakness that you are seeing in in the earnings. And Asian Paints, although has recovered from the day's low point at this point in time, that's also on the back of how decorators business in India has seen some growth, and international business, however, has registered a value decline on that front. But there has been a concern on the earnings from a long time. This entire fiscal year has been a series of weak and muted set of earnings coming in from Asian Paints, and the stock price has also been disappointing. 2311 for Asian Paints. How would you look at it, the stock now?
Well, we have been seeing corrective mode since last 3 to 4 days. Stock has been trading below its 20 days moving average. Trend is on downside for time being, but nothing to worry about this counter, because stock has strong support at 2200. Even before stock took the support of the same, and afterwards it went up to the level of 2465 level. So we can expect the same replicate momentum from the present level. I think this is the perfect time to get into the stock with the strict SL of 2200. Right now, stock is trading at 2308 level. If you talk about target size, then first target comes at 2390, and if stock breaks this level, then further upside would be there up to the level of 2530. It means we can expect somewhere around 9 to 10% of return from this counter. So risk reward is in favor for creating long position only. One can get into the stock with strict stop loss of 2200.
Okay, got that. So that's Asian Paints for you viewers. Keep an eye out on the paint sector at this point in time. We are now seeing two sectors now in the green: consumer durables and PSU banks. Rest of the sectors are still lower. Realty is the top loser right now, 2.7% lower, followed by small caps, that's down by 1.6%. Financial services, oil and gas, FMCG, Nifty Bank also under pressure. Private banks, metals, IT under pressure at this point in time. But you do see consumer durables and slight gains on the PSU banking names at this point in time. For you, when we talk about the PSU banks particularly, Kunal, how are you navigating through the opportunities there? We have seen Canara Bank come out with the earnings. Here there is an improvement, on the advances guidance for 10 to 11% for FY26. Retail deposits is their focus. NIMs have improved slightly on a sequential basis. Asset quality has improved, although slippages are still elevated for the company. At this point in time, we are seeing results impact on Union Bank. It's 3.5% higher vis-a-vis Canara Bank. Bank of Baroda, SBI and PNB came out in the last few days. There was some kind of a disappointment on Bank of Baroda and SBI for sure. PNB largely in line. How would you navigate through the PSU banks amidst earnings and what's happening now?
Well, if we look among the stock, I think one stock is looking very attractive, and that's a Union Bank only because, sorry, Canara Bank only, because no doubt Union Bank is up by 4% in today's trading session. Even SBI is trading at marginally with gaining. If you talk about other stocks like Bank of Baroda, PNB, Bank India, Canara Bank, sorry, not Canara Bank, Union Bank, they all are trading with with high volatility, and I'm not getting any proper risk reward for this counter. But yes, apart from these counters, I think Canara Bank look very attractive on a daily chart. Right now, stock has a strong support of 90 level. Stock is trading above its 20 days moving average, and we may see a further upside momentum as well in this counter from the present level. One can get into the stock at present level with strict stop loss of 90. If we talk about target side, then the way stock has been trading, I think first target would be at 102 level, and if stock breaks this level, then even we may see 110 as the final target. It means again 13 to 14 percentage of return we can expect from this Canara Bank. So Canara Bank look very attractive among these PSU banks.
Okay, we'll definitely keep an eye out on that space then. Titan, how would you look at it post earnings? You know, there has been a trigger of the gold prices continuing to rally for the jeweler. We've also seen Kalyan Jewelers also see some uptick today, but 4.5% of a rally for Titan. That's the stock that you need to watch out for on the Nifty, 3,522. Smart moves post the earnings have come in for the company. How would you read into the current move?
Well, since long we have been suggesting this counter for creating long only portfolio. When stock was trading at 3,100, right now stock is trading at 3,520. Now risk reward is not in fear for creating any long position. If anybody has this stock in their portfolio, please hold this stock. We may see a very good upside momentum in the counter up to the level of 3,650, and afterwards even it may march towards the level of 3,870. So yes, this stock looks very good for medium term to long term.
Okay, got that. So that's as far as Titan is concerned. Let's look at some of the other aspects too. Tata Motors for you. This has been the stock to watch for the last couple of days, Kunal. What are you doing afresh? 700 is back with us. This has been a stock which has consolidated and given a lot of pain to all those investors who've been holding on since higher four digits as well. 3% higher today after those 2-3 triggers, India UK FTA trade deal, and of course the UK US trade deal as well. Things turning in favor for Tata Motors, but how much of it can really come into the price? Can it really take Tata Motors back to the erstwhile highs, or are there still a lot of other factors that are involved here?
Well, overall, means if you talk about overall part, US UK trade deal, not only this, if you talk about number wise, the way Tata Motor has launched its product, the way Tata Motor is planning to introduce some new cars in its portfolio, I think it has some positive impact for future. And if you talk about EV size, Tata Motor is the only company in the India which is selling highest number of EVs. Not only this, even if you talk about LV and Jaguar side, I think it has beats sales of Audi as well. So it comes on number three in terms of luxury car, which is getting sold in India. So all the factors is favoring right now Tata Motors. Right now, stock is trading at 703 level. If we talk about technical side, stock has already given a breakout of its flag formation. Not only this, stock has been trading about 20 days moving average. So yes, we may see a further upside momentum in the counter, but right now stock is trading at 703. Now this is not the perfect time to get into the stock because risk reward is not in favor for creating any long position. If any fall is there in the counter up to the level of 678, 670, then it would become a good buying opportunities for the counter. Target wise, we may see some good upside momentum up to the level of 720, and afterwards even it may march towards the 800 level. And at that time, we will keep 640 as our SL. So if stock falls up to the level of 680 or 670, then it would become good buying opportunities.
Okay, fair point. We'll keep an eye out on that as well. Now, PSU banks are the top moving sectoral index right now, viewers. About 1% higher, PSU banks have moved up. Consumer durables is up by again about 0.8%. Autos are now turning green, mild green, largely led by Tata Motors' strong move that we are seeing. Let's look at all the top movers on all the three constituents then. PSU banks, you have Union Bank, 5% higher now. Can Bank, Bank of India, Indian Bank, Bank of Baroda, PNB, all of them up and about now. Consumer durables, let's look at this basket as well. We can discuss this with Kunal, Titan and Kalyan, which we have already marked out for all our viewers. These are largely the jewelry makers and of course reacting to their earnings. On auto, it's Tata Motors, Bharat Ford, Samvardhan and Hero Moto that are holding up in trade. Let's also understand from you, Kunal, how would you look at the consumer durable story at this point?
And if you talk about consumer durable, I think it's one kind of defensive sectors only, means pharma after FMCG and consumer durable. It's a defensive. The way few stocks have been trading on a daily chart. I think one should focus on a Titan. We have already talked on these counters. Yes, Kalyan Jewelers also looks very attractive right now, trading at 525. The way we have been witnessing some good upside momentum in the number side and not only this gold side. I think the further upside would be there in this counter. Right now, stock is trading at 525. One can get into the stock, but strict stop loss of 500. And if you talk about upper side target, and first target would be at 540, and stock breaks this level, then further upside would be there up to the level 560. So we have already talked about the Titan. Now, Kalyan Jewelers also looks very attractive. And amongst other counters, I think Havels looks very attractive at present level. No doubt, it is trading in negative zone in today's trading session, but nothing to worry about this counter. It's a fundamentally strong counter. One can get into the stock at present level. We will keep 1450 as our strict SL. And if you talk about upper side target, and first target comes at 1600. And if stock breaks this level, then further upside would be there up to the level 1680 as well. So Havels looks very attractive.
Okay, got that. That's the view that's coming in. Okay, we will thank you then for being with us, Kanal, this morning and sharing with us all your thoughts on the markets and navigating with us the current moves on the street and the opportunities that still exist. Thank you so much. Appreciate your time with us on the D Street. Now, within the F&O space, BEL has found its place among the top movers, 4.5-5% higher. In trade viewers, Union Bank is the top mover there, 5% up. Titan and BL. These are the three top movers in the F&O space as of now. And now we are waiting for Mr. Arun Kejriwal to now join in with us with his top market insight to find out how do investors really navigate through such uncertainties of war at this point in time. We'll be waiting for him to come in and share the views. In the meanwhile, let's start looking at some of the other aspects in the markets. Broader markets. Let's look at some of these stocks that are buzzing. It's again defense names and defense names at large. Apollo Microsystems, 5% higher in trade. You have Paras Defense, that's up 5% higher in trade. Premier Explosives, 7.5% in trade. BDL, now up 7.6% in trade. Mayur Uniquarters, 12% higher. Idea Forge, about 12% up. There is a massive move. Zen Technologies, 5% higher in trade. That's the kind of move that we are seeing. Extreme momentum in the defense pack, and that's the clear highlight for all of us to really see. HAL is also up by now 3% higher at 4561. Market expert Arun Kejriwal now with us on the program. Warm welcome to you, Arunji. Good to have you with us on a very, very important day amidst all of this buzzing momentum that we are seeing in the markets because of the geopolitical tensions. I want to take your expert take for all the market cycles that you
as compared to what happened at that time. The events that are very, very important now is you have drone and missiles which dominate the fighting, while earlier it was physical movement where the soldiers moved, the tanks moved, and that was the major impact of war. I believe now wars happen less on the field with humans and equipment of tanks than it happens in the air where the drones and the missiles do everything. Number one. Number two, what is important is that the social media influences you to such a great extent that you are unaware of what reality is, and it can cloud your decision of buying and selling. And thirdly, most important, I think 95 out of 100 people who are currently watching your show would not have been around when 1971 happened. So
Right.
it's difficult, different times. What you need to do is in such a situation, keep your cool. Investment is never for today and tomorrow. It's for a much longer period. You have to be uh, captain cool to, sort of monitor your money and carry on.
Hmm. Now, Arunji, what is the likely impact that you are penciling in case border situations escalate from where they are? We've already seen 48 hours of heightened cross-border tensions. If they were to escalate from where they are even now, what is the kind of impact that you're penciling in on the markets?
So without trying to give you a sort of a negative feeling, let's see what's happened in Israel, Gaza. It's been going on for quite some time. Ukraine, Russia, it it when it started, people thought it would be a quick, short affair and get over. I think we are close to 3 years and still counting in that war. Now, if things here get escalated, I'm not talking of this kind of a duration, but even if it goes on for a month, it can take its toll on the Indian side as well. Of course, our neighbor will be much more affected. He is more precariously poised. In a very, very short term, he has his he has his IMF loan request
Yes,
happening today, and
very right.
any lender, when he reviews a request for loan from a country which has gone to war, is never going to look at it favorably. So the situation, worst case scenario, getting extended could be damaging to both the countries. It could lead to a cost of the war, of course, and that could be a drag for a couple of quarters on the Indian economy. On the positive side, we have been troubled by incidents across the border for the last 20, 30 years, never ending. So, जो कहते हैं ना, once and for all, let's get done with it. Probably that is the mood. Restraint is being shown. On the first day, it was a terror infra attack that India did. Yesterday, what we saw, they were on the army installations only, unlike Pakistan, who has been attacking civilians all through.
Okay, got that. Well, we will thank you, sir, on that note for your valuable insights on the markets and, of course, how war-inflicted situations can impact retail investors and what the strategy there should be. Thank you. Appreciate your time with us on the program. Let's look at how the markets are shaping up. At this point in time, we are down by 218 points. 24,055 is the level at which the Nifty is really looking at this point. You can actually see a lot of action on the defense names today. You name it, HAL, BEL, both top movers on the PSU space. BEL is now 4.5% higher. HAL is up 3.5%. Strong momentum can also be seen on BDL. That's another one that we are looking at. In fact, BEL is the top mover on the Nifty. It's the top performer on the Nifty in terms of the percentage gain. Let's look at other stocks which are in focus. 14% higher for Idea Forge, the drone maker. That's the kind of rally. I don't even remember the last time you actually saw Idea Forge rallying over 14.5% in trade. Next, look at Bharat Dynamics, 9% higher. Premier Explosives, 9% higher. Apollo Microsystems, 7% higher in trade. Paras Defense, 5.5% higher in trade. Zen Technologies 5% up, Swan Defense 5% up in trade, DCX Systems is another one that's actually moving up pretty sharply in trade. Keep an eye on the entire defense space at this point in time. Viewers, we'll continue to track this for you. Apart from this, let's also look at KPR Mill 5% up. Let's also look at the other textile makers at this point. Remember, textile space has been in focus. Gokaldas Exports, Arvind Limited, KPR Mill. Look at all of these stocks and they will also be in focus. Right now, it's now only consumer durables. There's heightened volatility, viewers. Keep an eye out on India VIX. It's now another 6% up in trade, and it's now trading at 22.3 odd levels. So let's keep an eye out on the India VIX. This is the fear gauge that will continue to tell you the mood in the market. 242 points lower in trade. We are inching closer to 24,000. Heightened volatility, but the stocks are getting rewarded for their earnings today. Titan is up in trade, L&T is up in trade, 3.5 to 4% higher for both these stocks. There's strong momentum on Tata Motors amidst the UK trade deal, and of course some of the other auto stocks like Hero Moto are also doing very well in trade right now. We'll leave you at that, viewers, in the morning edition on the Markets Today show. But throughout the course of the day, we are going to be getting you all the insights that you need to know from what's happening across the border in the geopolitical world. 10 a.m. is when we will finally see MEA briefing, and you must definitely stay tuned for that, when we will get to know what really happened overnight and the clear message that comes in from the MEA at 10 a.m. Stay tuned.